Hello guys, welcome to BankAV channel. This video is part 1 of Trade Finance Overview. It covers 5 topics. 1. Current marketplace. 2. Broad principle of trade finance. 3. Parties to a transaction. 4. Payment mechanisms. And 5. Trends. Trade Finance Overview. Current marketplace. Trade finance represents the financial instruments and products that are used by companies to facilitate international trade and commerce. The initial business of trade finance was simply to provide remittance and payment for the trade activities of traders in various countries. Later, it gradually expanded to trade-related financing and cash flow management. Broad principles of trade finance. Principles of trade finance are payment, risk mitigation, financing, and information. Trade finance solutions for exporters. 1. Letter of credit advising. 2. Letter of credit confirmation. 3. Letter of credit negotiation and discounting. 4. Transferable letter of credit. 5. Export bill collection. And 6. Pre-shipment financing. How trade finance works. Stage 1. Signing the contract between the seller and the buyer. Stage 2. Making payment from the buyer or importer to the seller or exporter. And Stage 3. Shipping or delivery of the goods by the seller or exporter to the buyer or importer. Parties to a transaction. The parties to a transaction in trade finance include 1. Importer or buyer. 2. Exporter or seller. And 3. Financing institution or financier. Typical users of trade finance products and services. The users include 1. Importers, 2. Exporters, 3. Banks and financiers, and 4. Insurers and export credit agencies. Payment mechanism for documentary side collection. The importer pays the exporter after the exporter ships the goods. The importer needs the shipping documents to clear goods on arrival. The bank holds the documents until the importer pays for the goods. This is called side payment, sometimes known as documents against payment or D/P. Risk level for importers in documentary side collection. Consider medium level risk, as there are some assurance that the exporter has shipped the goods before you have to pay. Risk level for exporters. Consider as medium level risk, as the goods you have shipped usually get released to the importer after they pay. Air freight companies usually release goods to the importer immediately, even though they may not have paid. Payment mechanism for documentary term collection. The importer pays the exporter after the exporter ships the goods. The importer needs the shipping documents to clear goods on arrival. The bank holds the documents until the importer undertakes to pay for the good at a later date. This is called term payment, sometimes known as documents against acceptance, or D/A. The risk level for importers in documentary term collection is considered to be medium to low level of risk, as you will be able to receive and inspect the goods before you have to pay. The risk level for exporters is considered to be a medium to high level risk, as the goods you have shipped will be released to the importer when they undertake to pay at a later date. The importer may not honor this undertaking if there is a dispute or if they are experiencing payment difficulties. Trends in trade finance include 1. Digitalization. 2. Risk mitigation. 3. Data-driven processes. 4. Supply chain finance. 5. Capital aid for SMEs. 6. Focus on ESG. 7. More transparency. 8. Diverse workforce. 9. Alternative financing. And 10. a blend of banks and fintech firms.